Hey guys, what's up? How's it going? Robin here. Welcome back for another video. In today's video, I'm going to be giving you guys an update on our Canadian-based stock portfolio. And since we are approaching the end of February, I figured you might as well do our big full portfolio update, which I usually like to do a big deep dive into my portfolio and show you guys a bit of a review of how the month has been going for our investment portfolio. So just to cover really quickly here, if you guys have been investing in the market, you probably knowing that things have gone a little bit crazy lately. We've seen quite a bit of a dip and quite a bit of a drop, and I think everybody's portfolio, including my own, has taken a bit of a dip here. So throughout this video, I'm going to kind of address that. I'm going to give you guys my thoughts, my opinions on it, and I'm also going to say right now that if your portfolio does get a bit of a dip, or if you're new to investing, I always like to remind people that remember, when stocks go down, we can buy them at a cheap price, and then we can get them at a nice discount, and then when they go back up, we can benefit from that. So remember, as an investor, you're constantly looking for deals, and when stocks dip or when the markets go down, that's essentially stocks going on sale. So whenever things dip, it's always a good thing, even though it can kind of be a little bit of a bad mental thing, seeing your account in red if that's the case. But keep in mind, remember, we're buying them on sale, and in the future, we can definitely benefit from that. So in today's video, we'll cover all three accounts that I have on my Wealthsimple trade account. I have a personal account, I have a TFSA, and an RRSP that I've been kind of slowly working on building up throughout this year. So I'll go over each account, we'll jump aside the portfolios, and I'll give you guys a quick little recap, and I'll show you guys how our stocks have been performing for the month of February. So first things first, we'll cover each portfolio here on Wealthsimple Trade one by one. We'll start off with the biggest portfolio we have, which is the TFSA. This is our biggest account. This is a portfolio that's based around U.S. growth stocks, S&P 500, plus a little bit of dividend, Canadian dividend stocks mixed in here. We're focused on max growth inside the TFSA because remember, pretty much most of the income inside of it's going to be tax-free. And here's how the TFSA is basically performing for us. So we have a total of $95,000, $594 over the past day. Our TFSA jumped up 2%, and that's because our American stocks see a nice little rise up here, and I'll show you guys that in just a second here. Over the past week, we're currently down about 0%, so we saw a bit of a dip, but a bit of a rebound. Over the past month, we're up 2%, so all things considered, we did kind of rebound a little bit back because over the past 3 months, we did see a bit of a dip. You can see it's been a little bit up and down over the past month or two in the stock market, especially with the U.S. stocks. Over the past year, this fund is up 12%, which is just shy of $10,000. And keep in mind, this is me aggressively investing into this fund on a regular basis. And all time, the TFSA is up 14%, which is just under $12,000. Once again, pretty much tax-free. So the account has steadily been growing over time. We made some big deposits along the way. And in about August of 2021, I made a big deposit because I had another big TFSA, Wealthsimple Invest. I put it into Wealthsimple Trade, so that's where I've seen that big growth coming in, and then the account basically has continued to grow from there. The stocks we hold inside the account are pretty basic stocks. I'll do a full assessment today since we are doing a full complete portfolio dive. I'll do an individual stock kind of review, and then I'll show you guys my portfolio pie and kind of give you guys a more simplified version of all the stocks of the portfolios kind of combined together. But we'll go through each stock individually here. So we have AQN, which is going to be the first stock we have here. This one is, we're kind of waiting for it to rebound. I've been buying a little bit of it here and there, but it's kind of had a rough past couple years. If you guys have been following Algonquin, still a good company. I still think they will do well. They just had a lot of mishaps that kind of push the stock down. Next up we have is ATD. I'm a big fan of ATD. It's a growth-based consumer stock. A lot of good potential with the stock. I think it is going to grow. We're just going to wait and see how things go. Right, it's going to be a long-term buy, but they have like lots of good growth. We've already seen a lot of good dividend growth from them this year, so that's been really nice. Same with CNR. We've seen a lot of dividend growth. I don't have a lot of shares in CNR. Something I want to work on this year is putting more money into this company. CNR is one of the best railway companies. I mean, all the railway companies are pretty good here in Canada, like the two big ones we have. But this is the one I chose to go with, but they're both good. We're at 30% gain from CNR, so once again, not too bad. We bought this kind of during the pandemic, and we've just kind of been sitting on it. We'll most likely buy more in the future. Fortis is our next stock we have. We have 12 shares, up 9.64%. Once again, this is a good defensive utility stock. Haven't bought many shares recently, but I will be looking to expand. One of the things I'm looking for more to do this year is to expand more on these individual stocks I hold, since I do hold a lot in ETFs, but I still think ETFs are the way to go unless you get good returns with some of the individual stocks. RioCan has been one of my better performing REITs. We bought a lot of this back during the pandemic. We recently sold our Manulife, and I put it into RioCan, and it was our H&R REIT we put into RioCan as well, but RioCan is up 24% return for us, so pretty good stock growth. I basically bought it when all the real estate dumped down because it kind of knew it was going to rebound eventually. And we do get that monthly dividend yield, which is really nice as well. TransAlta and Renewables has been an interesting stock for us. I'm going to bring this up here just so we can see. Over the past year, the stock is down 13%, but over the past 5 years, it is actually up 15%. So we saw a big jump in renewable energy last year. A lot of non-renewable energy stocks went up, and now we're seeing a bit of a dip. It's kind of coming back down. So it'll be interesting to see how that goes. I think non-renewable energy is the way of the future, and it will take time as all companies are starting to adapt and do that more. But this company just kind of has been a little bit all over the place, and that's kind of more or less the reason why I haven't bought any shares. I think I'm going to go with, Algonquin and maybe some of the other utilities like Fortis instead, or even Canadian National Resources, because I just think some of those other utility companies and gas companies and oil companies potentially are better buys. But once again, it depends on what you guys like. Severia Corp is our next stock. I haven't bought any shares of this, looking to buy some more in the future. It's up 15%. Nice, good healthcare stock. In fact, I think this is the only main stock I really have, and I guess you could call it healthcare accessibility. So I should buy some more shares of this. TELUS Corp is my main telecom company I hold, and TELUS has done quite well. Nice little growth recently, up 20% actually, and it gives us a nice little dividend yield. So this stock has returned quite well for us. It is one of my favorite telecom companies. And then TD is my favorite bank company, up 46%. This is no surprise. We've been buying this since the pandemic when it was at those super lows. And I'm just going to bring this up so you guys can see how much it has grown over the past 5 years. So 5 years growth is 51%, which is good, but you can see like that this also includes the pandemic where we've seen a nice big decrease. It was trading at $75. We bought a lot when it was down like in the 60 range, and we've slowly buying it over time, and it's just been consistently growing. Canadian banks are some of the best stocks you can buy for many reasons. But TD is my favorite Canadian bank for, once again, I've mentioned so many times on this channel why I like TD. Lots of growth, earnings per share keeps increasing, lots of diversification, they keep expanding. They have tons of cash, tons of room, growth, tons of good history, good stock appreciation, good dividend growth, good dividend yield, all that stuff. Like really good company overall. But you can't go wrong with a lot of the banks. And then going towards the bottom here in our TFSA, we have our big ETFs. We have VDY and VFE, which are main ETFs. You can ignore this one share of VTI. I bought this for when I had Wealthsimple Plus. It was a demonstration. You can ignore that. But it is a good fund, but I only have 0.16 shares, so you can just ignore that. But VDY is our main Canadian-based monthly dividend yield ETF, and then we have VFE as our main growth-based ETF, which we bought a lot of shares towards the end of last year, so we haven't seen a lot of growth yet, but that will come over time. And it's currently at a 2% growth for VFE, and then VDY is at 20%. So Canadian stocks have really done quite well this year. They've kind of had their nice rebound year, but we didn't buy VFE back kind of during the pandemic, so we're kind of seeing a bit of a dip recently, but once again, it's a long-term hold. It will grow over time. And at this point in time in the video, you guys are enjoying the video. You guys want to do me a big solid. Be sure to smash the like button. Really helps the channel out. And if you guys want to see more Canadian-based content, you guys want to follow alongside with me as I do these videos and as I grow my portfolio, and as I live off my dividends, be sure to subscribe to the channel. And then our personal account is going to be a little bit different than our TFSA, but more or less the same. It's more weighted towards Canadian stocks for eligibility and dividends and different things like that. Plus, I actually honestly think some of the US growth stocks will kind of earn us more income, so I want more tax-free income in the TFSA, right? That kind of makes sense because the stock appreciation is tax-free. So I kind of want to hold some of the more growth things I think are going to grow long term. I want to kind of aggressively grow that TFSA and get that tax-free benefits. And then some of the more dividend stuff and the more income stuff I'm going to put on my personal account. But at the end of the day, this is something going in the future I'm going to have to research more. I'm going to have to try to figure it out more. To kind of see what do I want to kind of, as I focus more on income, which is probably going to be something that's going to happen over the next little while, I got to figure out what's going to be the next taxable way to do it. And it's kind of confusing with some of this stuff, but I'm kind of working that way out right now. So we have the personal account, which is just under $15,000. Over the past day, it is up 2%, so a bit of an increase, steady growth. Over the past week, it's kind of flatlined. Past month, it's up 3%. Past 3 months, it's up 5%. 1 year, it's up 10%. So, and this is mostly Canadian stocks. So we can see like our Canadian stocks are doing quite well. And then all time it is up that 10%, about $1,400. So steady growth throughout this account. This is just really basic fundamental Canadian stocks. A lot of the same stocks I have in my TFSA. The only differences are CNQ. I hold CNQ here. I hold Manulife as well because once again, I'm focusing more on Canadian dividend stocks inside this portfolio. I also hold Power Corp of Canada. So a little bit difference change here. but more or less the same. And I don't own a lot of shares, as you guys can see. Once again, I want to remind you, I am working on expanding on these. So CNQ I bought recently, up 3.48%. Manulife I bought a long time ago, up 1%. Power Corp of Canada, I think I bought towards the end of last year, currently down -6%. And then we have our TELUS, our TDE, and our VDY and VFE, which we also hold in the other accounts. So nothing new there. But I just wanted to give you guys a quick little recap on the personal account. And now the RSP is going to be an interesting thing, because I recently was going to use the RSP as a growth stocks for Canadian stocks, but I'm going to shift my focus a little bit. I will be focusing on growth stocks, but I don't, once again, I got to try to figure out with taxes and whatnot. It's probably going to be long-term growth stuff, because the RSP you can use to use like a down payment for a house, or you can use it when you retire, and that's pretty much it from my understanding. So we're going to have to figure out what I want to put in here. Probably growth, because I want to grow it the most as possible over time, right? And you get tax-free benefits. You also get tax benefits for American stocks. So one thing I'll probably do with the RSP is I will put like the S&P 500, of course, in here as the base hold, and then maybe I'll buy some individual stocks or something. But I did buy Shopify way back in the day. I think I bought like $100 worth. I recently sold it. It's obviously down -26%. I might just restart the RSP because it's not going to really impact anything, and it just kind of screws things up. But as you guys can see here, I just have cash sitting in my account. So this is something I might just throw into an ETF like the S&P 500 or something, and kind of just go from there, and maybe over time slowly expand it with some other stocks. Now what we're going to do at this point in time in the video, now that we covered all that stuff, we're going to actually compare all the funds together, because we're using a portfolio tracker called Track Your Dividends. It's the only portfolio tracker that I know that's Canadian based that kind of does what I want it to do. That's free. So we're going to be using this one. Hopefully some new ones pop up over the next little while. But if we take a summary of all three of our accounts together, which is $110,000 Canadian, we have a dividend yield of 2.3%, which is relatively on the low side. Towards the end of this video, I'm going to talk more about how I'm going to plan on increasing this dividend yield over the next little while, as I look more to kind of earn some more passive income from my portfolio, but not go too crazy with it. It'll just be a small percentage, but once again, I'll talk about that more later on in the video. And our yield of cost is 2.53%. Annual income is $2,535, so making $2,000 a year in dividend income. And that's pretty much the dividend yield. Now, if we go up into diversification here, we can see what our actual holdings are. So here's a little equity. Here's a little graph saying that we all have equities, so we hold nothing but stocks. We can sort it by industry if we want. I'm just going to skip down here so we can see everything in a nutshell really easily. So we have a total of 14 holdings in all of our accounts. Our smallest holding is Shopify, but we just sold that. I haven't updated it on here yet, so you can just ignore that. We have a total of 8 sectors, and our largest holding are ETFs, which represent about 80% of the portfolio. Like I mentioned, I am an ETF investor. I believe it's fundamentally, I think most people would do well at picking the fundamental of their portfolios in ETFs. You know, you can't really go wrong with it. The biggest holding that we have is VFE, which is 50%. I kind of want to bring this up to be about maybe 60-70% across all my accounts, like my total portfolio holdings, and then maybe have 30% towards dividends, and maybe have, I'm going to probably change that dividend allocation over the next little while too. More info on that coming in the future, but I want to kind of bring this up to maybe 60%, maybe 70, I don't know, to be focused on growth, and then the other 30% or so to be focused on dividend stocks. And right now we have 30% in VDY, and then we have the individual companies like TD, Riocan, Alimentation Couche-Tard, TELUS, and Algonquin Power Utilities, and some other ones here that basically don't represent much inside the portfolio. I do want to build these individual stocks over the next couple months. So that's something I'm looking forward to doing as well. So because we are doing the month of update of February, I'm going to kind of recap everything I've been doing inside the portfolio, because I like to be transparent with you guys. So at the beginning of February, I made a big purchase for VFE because I am starting to buy more VFE, especially in my portfolio, my TFSA, because I want to, once again, I do have tax-free contribution room for this year. We all get $6,000, so I haven't really used much of that. So I am buying some more VFE. That's probably going to be the main focus aside my TFSA. You guys will see that here. And then we have VDY as well. I've been buying as well. When it comes to individual stocks, I bought a little bit of Alimentation Couche-Tard. I bought a little bit of TELUS. I bought TD. I bought CNQ, which was the one I focused on in my last video. It was a new stock I was buying, and I will likely mostly buy more in the future. And I bought some more VFE, some VDY, and some Algonquin Power and Utilities. So once again, nothing too crazy, pretty basic stuff, just kind of stocking up on more of the stuff I have. The only new stock I bought for the month of February was CNQ, and March I'm probably going to focus on buying more individual stocks as well as topping up my TFSA with the S&P 500 VFE. And of course, it wouldn't be a weekly update without giving you guys an update on the dividend income for the entire portfolio. So we haven't received any dividends recently, so I haven't updated the spreadsheet. But here's the previous months just to give you guys an update on that. You can see we started this fund in January, and things have changed a lot since we started this portfolio. I'm going to be honest, guys. It originally started as a dividend portfolio completely. Things have changed a little bit, and things are probably going to change a little bit in the future as well. But that's such the way is investing. You know, your goals change over time. You learn new things. You just change as a person, change your goals change, your life might change. A lot of things that can affect this, and don't feel bad about changing things. Just focus on, doing something that's fundamentally sound, that's going to get you a good result. Then over time, you can kind of adjust things. But as long as you're fundamentally doing good things, you don't really have to worry too much about that. And you guys can see our income is slowly going from the dividends all the way down to this year. So January in 2022, we made $369. That was our biggest month ever. And then February, we're currently at $126. Maybe some more dividends coming towards the end of the month. I'm not too sure. And that's a total of $2,100 in dividends from this portfolio. But as you guys can see, we also focus on stock growth as well. It's an important part of every portfolio. So the dividends is small, but it's slowly been growing over time. And I got this cool little graph with my awesome graph skills here in a crappy open office to show you guys how this has been growing over time. Maybe I should get somebody to make me, a fancier graph. I don't know, but it gets the job done. You can see how things have been growing over time. Once again, some months are up, some months are down, but it's kind of, slowly weaving to go up higher and higher as time goes on. And that's the focus of this portfolio. Slowly grow that dividend over time and take advantage of the stock growth as well. Before we finish up the video, I just want to do a quick little talk about my living off my dividends case study. This is a thing that I was trying to use my low dividend income that I have, because even though I am building a dividend-based portfolio, it's fairly low yield because we do have a focus on growth stocks because I'm younger. And we also have some more dividend growth-based stocks. So we don't have a high yield, but one of the things I've been thinking of recently was to kind of grow that dividend yield and kind of focus more on documenting how I could use those dividends to fund different things in my life. Now, if you guys have been watching my videos, you've seen that I've been buying some simple things here and there, but I really would like to take things to the next level. And even though I'm young, I'm 31 years old, I would like to kind of benefit from some of that dividend income and maybe try to experiment with some more higher yield stocks or some higher yield funds to a small degree. So that's something I've been thinking about, and I would love to kind of cover more of how those dividends can do things like buy my groceries or pay for my rent. And when I do eventually think about buying a house and getting a vehicle and stuff, we can also use it for those things as well. But the reality is, with a low dividend yield, it's going to take a long time to get there. So going into the future, one of the things I will be discussing and will be thinking about more is kind of maybe putting a percentage of my portfolio into a high yield fund to get a little bit more dividend income coming in, so that I can start to see some of that benefit. And even if it is just paying for my monthly groceries or paying for a cell phone bill or paying for part of my rent or my mortgage or something, or paying for gas for my car, we can start to see some of those things add up, and I can kind of document and show you guys how that's been working out for me. So once again, that's kind of going to be in the future, and I'll probably do a few videos talking about that, but I am definitely looking at some higher yield funds to kind of consider adding a percentage of my portfolio to kind of benefit from that. So if you guys have any suggestions or any ideas about that, please let me know in the comments and let me know what you guys think. So anyways, guys, that's it for today's video. Like usual, let me know if you guys enjoyed it. Let me know what you guys think. Take care, have yourself a good day, and I'll see you guys later.